Hi, this is Mac with PriceActionTradingSystem.com, and this is Friday, January the 20th. This is our chart lesson for Friday, and this is going to be short and sweet because there just wasn't anything happening today. Honestly, I like trading these kind of days. They're easy to me because it's very predictable, and we really spent the entire day in about a 3.5 to 4 point trading range. The volume was very light. I'm afraid that people were just back in another range. It's just a little bit higher. The 1300 is going to be that's a psychological point for the market. And so it doesn't surprise me that we're seeing this here. I would expect a little more volume probably than what we had. I actually would have expected more of a correction once we hit this area, but that's why you don't try to guess what the market's doing and you just go with what's there. And to be honest with you, there wasn't much here today. And I got an email from a couple of you asking me, was it a difficult day? And to be honest with you, I kind of like these days because they're really, really predictable. And but anyway, I'm going to do a quick chart lesson. You can see the resistance was mostly at 1309.50 pretty much all day long, and the support was pretty much 1305.75 all day long. And you know, it wasn't very hard to figure this out because this was pretty much what we were looking at coming out of the overnight. You might have had your line further up here by the time the market opened, and that's okay because that still would have got you in where you needed to get in on every trade. This one you might have, it could have got you in a little bit too early on this particular move right here around 9 o'clock, but shouldn't have surprised you. If most of you should have been waiting on this doji right here when prices broke lower and then turned and closed higher. That would have been your trigger to go long, a break above that little doji right there. And if you went long right there, it was another easy scalp. But when you get a day like this, and honestly, I kind of like these days because to me, these are easy days to trade. And what I will do is I will just sit here and I will have blind orders right here. I'll just have my blind orders in at these strong support and resistance areas. And I'm not recommending that you guys and gals trade blindly. What I would say is you probably should wait on the reversal to prove itself, and that would have been going long right above that bar here. Would have been probably going long right. I don't think I would have gone long right there. Maybe, yeah, it probably would have been okay. Would you? I don't know if that trade would have worked out if you went long right above that bar. Entry would have been 1306, and yes, nope, you wouldn't have survived that. 1306.25 was your entry, and it went to 1306.75. So you might have got stopped out on that trade right there. But that's why I usually just have a blind order sitting one tick above the last low or above where I think the support is, and that way I'm pretty sure to get out. And I would have had my line, my resistance line. Let me get some of this stuff off here. I'm in draw mode there, but originally my line would have been probably right here, and then after this move I probably would have moved it down to right here, and then I would have moved it to there. But you can see really from right across these closes here, that was pretty much it for the day. That was the main one, and we did try to go lower here, but you can see all it was a trap. It trapped people, and prices rallied back up to the high side. So if you just concentrated on buying these lows down here and selling these highs, it was really pretty easy to make money today. And but if you were trying to get long or short in the middle of all this, you're really you're going to be lucky if you can if you make any money, you're probably going to get stopped out just as it does turn to go where, to go the other side. And the only way to trade this is to buy this low side down here or sell this high side. And then you can see somebody actually sent me a note and says, hey, I watched this all day, and then I finally decided to trade it right there, and then it broke through. How did I know it was going to break through right there? Well, you didn't know it was going to break through right there, but I'm going to show you something. By the time it got to that, look what time it was. It was 2:45. And what I tell people about not trading after 2:30, and really you probably shouldn't trade after 2, but after 2:30 on a Friday, everybody's gone. Anybody and everybody, that this office was dead. I was the only one here at 2:30. And nobody's trading. Most of your big traders, they're done. It's Friday. They're taking off. They're going off. And it's just like the overnight, just how they broke it out up here in the overnight and broke it a little lower down here in the overnight. It's because the volume's thin and nobody's trading and everybody's gone home. And then they run it on through. So there was no reason to be trading at this time of day. So if you got burned right here, you were breaking one of our main rules, which is you definitely don't enter after 2:30 Central. That's Central Standard Time. So I don't know what time you're on, but the market's going to close within the next 30 minutes. And you don't have time to take a trade, and if you do get in a trade, there's too many chances that something like this will happen because most everybody's out before 3 o'clock, and most of your traders are probably on Friday are probably done by noon, 1 o'clock at the latest. And you can see that really by about 2 o'clock here, there wasn't much happening, and then they had this little short trap here, second entry long at the EMA, and they ran it up. And one thing you could have looked at, one thing that might have alerted you to where this was going was by coming back here and looking at this move. There's your move right there. That's the measurement of that move. Now, I'd be willing to bet this other leg's a perfect measured move. And you look at that. And so that would have alerted you to look that, hey, prices might go to this other. The stronger resistance is this one up here, because this is the high this is a long-term high up here, double top, triple top around 1311. So if prices get in here, that's where they're probably going to. And at some point, and that's exactly where they went to before the day was over, and you can see if you'd have sold up here, you'd have done well. You'd have had enough room to scalp out. Of course, it's too late, but it was too late to enter right here. So that's the biggest warning I can tell you. That's how you avoid that, by not trading after 2:30, probably even after 2 o'clock, especially on a Friday. And if you just traded this range during the day, right across there, that was the close of the overnight. If you had your line right there, you can see that pretty much had you right in the right spot all day long. You might have got hurt right here unless you were buying blindly, and even if you were buying blindly down here, you would have survived this trade, and you wouldn't have wanted to buy again until it broke out lower and reversed or went higher or whatever. So when you had this double bottom and prices broke lower right here and then reversed, that was a strong clue that that was just a short trap is all that was. So that would have been the time to buy when prices couldn't get back above the EMA right here after making these lower lows and closing lower. That was probably a good sign. It's not time to go long yet. And here's another thing that I look at sometimes. Since prices came up short right here between here and there, they're probably going to go past about that same distance. It's that same measured move type thing that we always talk about. And let's just see how close that was. It came up short by that much, and you can see it went a little bit past that. But that's another clue that sometimes that will happen. When you come up short, that was a sign the market was weak, and so they're going to pressure, they're going to press it when it gets down here to see if they can take it lower. And they did break it through, but all they did was trap everybody, and then it reversed and went right back to the high again. And then it pulled back, and when it held right there this next time, and you see it closed way up here, the closes were up here at 1306 1/4. So that shows you the market's now getting a little bit stronger. We went a little higher here, and we closed a little higher here. So this is a double bottom pullback, and that's usually a strong clue too that, so that's when I would have been measuring this leg and looking for this measured move over here. and I probably would have ridden this thing out, and, unless it did hold here and turn back down. If I'd had any runners going, I would have held on to them and rode it out to see if we could, I would have exited up here at the former high. And you can see the original closes right there are probably going to be right here where those closes were. So that's why I'm always telling you, and you can see that. That's why I'm always telling you to watch these closes. Don't ask me why it works, but it works. It means something. There's something to it because I see it happen over and over and over. And so just be aware of it. You got to take the whole move into account, but when you start looking for your support areas, a lot of times I watch for these closes and where they happen, because you can see if you use those overnight closes right there, that kept you right in the right spot all day as far as where the best buy spots were. And that probably would have kept you safe on this trade as well, because if you look right here, even if you'd bought one tick in front of that, you'd have been in at 1306. Well, prices didn't go but to 1305 and a quarter, so you wouldn't have gotten stopped out with a 2-point stop, and there was enough room at 1306. You still wouldn't have got out there, but you wouldn't have had a loser. You would have known to probably get out of this trade when we got into this range right here. That's what I'm always telling you. Once you start to see congestion, don't hang on to that trade. Just go ahead and try to get a tick or get out at a tick or break even or whatever. And if you'd entered at 1306, you can see when it didn't go anywhere and it started overlapping, you had 1, 2, 3, 4 bars that you could have got out with a tick or two, and you wouldn't have had a loser there. So keep that in mind. Once you enter a trade and it goes into congestion, it's very possible you might be on the right side, but don't risk it. Just get out. Save your hide and look for another entry. So if you'd have exited here with a tick, you'd have still made a tick on this trade, and then you could have re-entered right here when you had this failed break lower, and look at what you could have done. You could have rode it all the way up. It looks like your runners probably would have survived as well, so good chance that they probably did. But anyway, that's how I handle that. Once I see we go into congestion, unless I'm really, really, really confident, I'm going to exit. Most of the time, even if I'm confident, I'm just going to take my money and exit and go to the house and quit fooling around with it and look for another entry, because another one will come along soon. So you don't want to hang on. Once you go into that congestion, anything's possible. And we actually traded down into this area. And so remember what happens when you get congestion at an area like this. That's showing acceptance of the prices. That's not rejection. This is what rejection looks like. Here and here and even here. Those prices got rejected out of there. They didn't hang around down there and start overlapping. So that's a good sign. And just like right here, prices didn't hang around up here very long and overlap and start looking like this. They fell and came right out of there. And then same thing here, when prices got down here, you can see nothing could even close down there. So that's definitely rejection. There's just too much buying right down here. People were ready for this time. People were seeing it by this time, and they understood this was a trading range, and they were gobbling it up down here, knowing that it's probably going to trade on, and they're going to take it on higher and go back and test the real high up here, the more important resistance that happened for the last 2 days up there. And so those are the clues that you got to look for. And the main thing is, don't be entering in the middle of all this. Somebody, another trader sent me something. They had a trend line drawn off this, which that is not wrong. This is more of a wedge, a flat top wedge pattern. But this is not a trend. This is just kind of a wedge pattern. You can see it was flat here and it was kind of sloping up. But look at all those overlapping bars. Look at all those dojis in there. Look at all the stems on both sides. That's not a trend, and you don't want to be trying to get long or looking for a trend in that. And the only thing you might do is buy off of this trend line up through there that we had. But you can see we finally broke it there. We went back and tested it, made a little two-legged move, and then it came back down again. So trend line rules still really held there. They still came into play. We just didn't make a new high. But this is not really a trend. If you can look at that and you can see a trend, then you're forcing a trend in there. So don't be careful of that. This is a trading range. There's too many flat, there's too many overlapping bars. You got a flat top up here. You got a little bit of a rising bottom, but it's just a flat top wedge is all it is, and that's not a trend. So now here's a little bit of a trend. That's a trend right there, a little bit of a trend. You see we broke it, came back down, made a new low, and then went higher. This is a little bit of a trend right here. And you got another little trend. So you do have little small trends in here, but they're just not big enough to trade. And I wouldn't be trying to trade these trends because they'll fool you. And when you get a range that's only 3 or 4 points, the only way to trade this safely is to sell the highs and buy the lows. And even then, you see sometimes it breaks through, so you just have your stop up here. But there's plenty of reasons to know to stay out here if you were paying attention. And at the very least, you might have seen this big bullish move here, which was a bounce off and a double bottom pullback, and then you would know to at least probably say, okay, here's this move right here. Let's see if we get a measured move off that. And you can see you still got your measured move off that as well. It didn't matter if you used this leg. If you use this leg, there's your target right there. And if you use this leg instead, there's your target again. It's pretty much the same identical place, 1 tick difference. So, you know, you don't have to get this stuff exact. Usually if you're just getting close and you're getting it right, you're going to be in the right ballpark. So, but anyway, hopefully you learned something today. Hopefully most of you saw this range. Wouldn't mind having some feedback. If you saw this range and you traded it properly today, give me a big thumbs up and say, yeah, I'm getting it. I spotted it. And if you didn't, like I know some people didn't because I got some emails today, just hang in there. You don't learn this stuff overnight. It takes a while. And obviously it's always easier to see it after the fact. But there's no reason anybody shouldn't have. If you didn't recognize this as a trading range today, you got some work to do. I'll just leave it at that. And just keep working on it. But anytime you start seeing this kind of stuff, there's no trend. You know, a trend continually continues to move higher or continues to move lower. And we were making lower lows here, but we weren't really making any higher highs across here. So that's one way to know. And you see here you're making higher highs and higher lows all the way up. That's a little trend. And here you're making lower lows and lower highs. It's not a strong trend, but it's still a down trend. And you could have had an idea about where this one would reverse. There's your first leg down. There's your two-legged correction in the middle. And then look at there. That would have gotten you, it went 1 tick further and couldn't close, and it actually closed right there at that target. So remember to watch your legs because they're strong clues too. And they sometimes even in this chop, measuring these legs will get you in the right place. So anyway, it's Friday. I've been here way too long today. I'm going home. Hope everybody had a great week. Hope you had a good trading week. I hope everybody has a better week next week. Have a great weekend, and we'll see you next time. This is Mac with PriceActionTradingSystem.com.